Hi guys. So today we are going to cover a topic called principles of accounting. So I think you all know that. So today the important topic which we are going to cover in accounting is principles of accounting. So let us introduce about myself. So my name is VB Karnamurthy, working as an associate professor in Wings Business School, Tirupati. So uh, let us see in deep into the topic of principles of accounting. So let us see the introduction of accounting. So accounting is the process of recording financial transaction pertaining to a business. You can see that accounting is going to record the financial transactions of any business. So whether it may be a private or public or non-government or government. So any business definitely they want to record financial transactions. So financial transactions plays a major role in accounting. So, in this accounting process includes summarizing, analyzing, and reporting these transactions to oversight agencies. So, regulators and tax collection entities. So, why we want to prepare accounting? Because accounting is going to be a mandated thing for regulators and tax collection entities. Because if you want to pay any taxes to the government, you definitely want to be accountable. So, if you are having a limit of certain thing, so your tax is going to be a certain limit. If the limit is going to be exceeded, your tax will also be get exceeded. So for knowing that limit, you definitely want to prepare accountancy. So last point, so the financial statement used in accounting are concise summary of financial transaction over an accounting period, summarizing a company's operation, financial position, and cash flows. Here you can see the accounting period. Normally, the transactions which are going to be happening in the organization are going to be prepared in a accounting period. By preparing of that financial transactions, here we are know about company's operations. So how company is going to be operated in that particular year, and what is the position of the organization in the present year, and we are going to know about the cash flows, how the cash inflows and cash outflows are going to be happening in the financial thing is going to be clearly known in the accounting concepts. So this is a brief introduction about the principles of accounting. So let us go for the definition of accounting. Accounting is the art of recording, classifying, and summarizing in a significant manner and terms of money, transactions, and events, which are in part at least of a financial character, and interpreting the results thereof. You can see that accounting is the art of recording, classifying, and summarizing. You can see that recording is nothing but recording of transactions. So each and every transactions which are going to be happening in the organization want to be record. So after recording each and every transactions, we want to use certain principles for classifying of accounting. So we definitely want to use the principles. So principles of accounting plays a major role in classifying of accounting. So after classifying, we are going for summarizing. Is nothing but which account goes for which item. So we want to be summarize that. So based on that summarize, we can easily understand the financial character of the organization, and we can know the results of the organization for the particular period. So that is what the clear definition given by American Institute of Chartered Public Accountants. Okay, so this is what the important definition for accounting. So let us go into the topic called accounting principles. So the accounting principles are going to be broadly classified into three types. First one is assumptions, second one is concepts, and third one is conventions. So assumptions are nothing but those are the pillars of preparing of accounting. So without pillars we can't do any construction. So pillars are going to be very important for any type of things. In accounting also the assumptions are very important. So what are those assumptions? We can see into the assumptions in detail. So first thing, business entity. So what is meant by business entity? Business entity is an assumption which says that business and owner are two different entities. Business is different and owner is different. In this concept you can easily understood that if any money is going to be kept by owner into the business, then we are taking it as capital. If any money is going to be taken by the owner from business, we can show it as drawings. So here we are clearly explaining that business and owner are two different entities. That is what the explanation for business entity concepts. So next one, money measurement. What is meant by money measurement? You can see that accounting is going to be measured only with money. So it will not be measured with quintals, liters, or quantities or any other thing. So accounting is going to be measured only with money, because it deals with money only. Accounting is going to be deals only with money only. Next one, accounting period concept. So accounting period concept is going to be clearly explains that accounting period concept explains that you should prepare the accountancy in a year, because every year you definitely want to be sure that how much the company is going to get the profit, that you want to be clearly show in accounting period concept. Okay, so accounting period concept is going to be broadly classified into two types. First thing is nothing but financial year, and second thing is nothing but um, annual year. So financial year and annual year, you can see that financial year is nothing but the year which starts from uh, April 1st to ends from March 31st, we can call it as financial year. And then annual year is nothing but the annual period is nothing but the accounting which starts from January and ends with December, we can call it as annual period. So here you can easily understood. So every year you definitely want to prepare accounting. Every year you definitely want to prepare accounting, and you want to close the accounting also. So that is what the rule which is mentioned in accounting period concept. Okay, so next thing, going concern concept. So this going concern concept will clearly explains that business will be forever. So for that reason, whatever the transactions you are posting, want to be keep in mind that the business will be goes on for long period. So business will not be stopped for within a day or a month or a thing. So business is going for ever. So forever you want to prepare the accountancy is a going concern concept. So let us come for concepts. Concepts, we can call it as dual aspect concept. So what are the rules which are going to prepare in the accountancy is going to be nothing but concept. So in that rules, the first rule is dual aspect concept. You can see that whatever, you can clearly see dual aspect concept will be clearly says that every debit there should be a consecutive credit. So every debit there should be a consecutive credit. So if anybody is selling anything to you, here we are going to get two types of transactions. If anybody is going to sell you any of the product, you can say that if you are purchasing any product, what you are going to do, if you are purchasing any product, so product is going to received by you and you are going to pay the cash for them. So product is received by you and you are giving product, no, you are giving cash, no. Here you can clearly know that. So what is going to be happen is going to be clearly understood by you. Here you can see, suppose if you are purchasing a pen, if you are purchasing a pen by giving 10 rupees to the shop owner, so you are getting a pen is nothing but stationery. Stationery is coming to you, stationery account data, to what you are paying cash. So stationery is going to be debited and cash is going to be credited. So here you can clearly know that. So one thing comes and one thing goes is going to be the concept of dual aspect concept. So every debit there should be a consecutive credit. That is what the concept of dual aspect concept. So next thing, revenue realization. So revenue realization will be clearly says that whatever the revenue realized in the particular year want to be get shown, you will not show the imagined revenue which are going to be happen in the future will not be get shown. So you definitely want to be sure that whatever the revenue which is going to be realized in the year is going to be shown, which will be realized in the previous year or next year will not be get shown in the present year. Accountancy will be shows that revenue realization concept. Next, historical record concept. So historical record concept will be says that the transactions which are going to be recorded in the organization want to be safeguarded, because for historical purpose. So if we want to compare our profits from last year to this year, we definitely want to maintain the historical data of previous year. Without the previous year data, we cannot compare the how the future is going to be for the organization. That's why we are continuously maintaining the historical records of all the all the years. We are historical data of all the years. Next one, matching cost concept. Here you can see that matching cost concept will be clearly explains that revenue and expenses. So revenues and expenses want to be matched. That's why if you are preparing any of the trial balance, so trial balance definitely want to be get match. So why it want to be get match means revenue which are going to be recognized in the year want to be match with the cost. So revenues and expenses want to be matched. Then only the matching cost concept is going to be get work out. Next, cost concept. So what is the cost concept? Cost concept will be clearly says that, so how much the cost you are invested for purchasing of anything, you want to be show that cost only. Don't say that in the future the cost of the price product is going to be get increases, so that's why I'm going to post this much of cost before. So don't show such type of things. So whatever the cost which are going to be incurred in the year want to be get shown. Here you can see that, for example, if you are purchasing a land, so if you are purchasing a land today, in the year of 2021, you are purchasing for 50 lakhs. In the year of 2025, the land cost will be definitely increases to 70 lakhs. That is your imagination. But the present year, in the year of 2021, you want to show only the cost that you want to say that the 50 lakhs is going to be the cost which you are going to invest. Don't show the market price. You want to show only the exact cost. So market price is always different. If you purchase any land, the market price is different and government price is going to be different. You want to mention only government price, not a market price. Okay, that is what the clear concept for cost concept thing. Next, objective evidence concept. So in this objective evidence concept, every transaction which are going to be posted in the journal entry definitely require an evidence. Evidence must be bill or a receipt or anything. So without objective evidence, we cannot record any transactions. Is going to be the important thing for concepts. Next one, conventions. So here the conventions are going to be clearly explains that the first and foremost convention is full disclosure. So whatever the transactions which are going to be happening in the organization, you definitely want to be disclosed to all the persons in the organization. You want to be disclose it in the financial statements. So if you disclose in the financial statements, then everybody will easily understand your financial statements. So for preparing a financial statements, you definitely want to show the full disclosure of all the transactions. Okay, next thing, materiality. So materiality is nothing but don't show all the things. So whatever the required things are going to be get required for preparing of financial statements, you should show that only. So whatever the important transactions which are going to be happening in the organization, materiality. So we should plan for different activities, but the plans will not be get worked out for all the things. So only work out for certain things. So whatever the plans which are going to be worked out for certain things, that only you want to show. Don't go for imaginary things. So materiality is nothing but whatever the materiality activities are going to be happening in the organization, you want to be show that thing only. Next one, consistency. So company will be run for long number of periods. So going concern concept, based on going concern concept, company is running for more number of years. So if company is going for more number of years, so what is going to be happen, consistency is going to be very important. Whatever the principle you are applied in the year of 2020 want to be applied in 2021. Whatever the principle you are applied in 2021 want to be applied in 2022 also. So here you can see that what the principles once are decided by the organization, you want to carry forward the principles. Don't change the principles in between. That is what the consistency concept will be says there. Next, conservatism. So what is meant by conservatism? So conservatism will be clearly explains that you want to be recognize the losses. So revenues which are recognized in the future will not be get shown, but the losses which are going to be recognized in the future, you definitely want to be taken into consideration, and you want to put certain money for that type of losses, because loss is going to be definitely happen in the future. For overcoming of such losses, we definitely want to put certain money as a reserve. So for maintaining of that reserve, we are having a concept called conservatism. So this is what the complete package for accounting principles concept. So I hope you all understood about the topic. So today we are going to completed a topic called principles of accounting. Okay, thank you guys. So we are completed the topic called principles of accounting.